Hello everyone, and welcome to this next session on Project Icebreaker, a new architecture for cross-border retail CBDCs. It's my absolute pleasure to welcome Andrew Abir, Deputy Governor of the Bank of Israel. Now, Andrew has been at the bank since 1987, initially in the Office of the Governor, and then he moved to the Markets Department in 1992. So a true central banker with huge, vast of experience to share with us today. So I just want to remind everyone, please submit your questions virtually if you're listening online, and also we'll take some audience questions towards the end. We're going to also launch a poll. Maya, if we could just get up on the screen so everyone can see what we're asking. So which interoperability model for connecting CBDCs do you support? A little bit technical, so we're testing our audience a little bit. And there's a couple of options. We're looking at the compatibility model, single access point, bilateral links, and the hub and spoke solution and the single system. So we're going to dive into the hub and spoke solution with Andrew today. So before we start, I would like to just draw everyone's attention to a short video from the Bank of Israel on the project. Maya, if you could just play it for our audience, thanks.
Communicating or sending large amounts of data around the world is cheap and easy. But sending money to another country is usually expensive and slow. The way money travels across the globe relies on many intermediaries, increasing the complexity, time, and cost of transactions. One of the main difficulties is that most payment systems are designed for domestic payments, not for international payments, and often do not communicate with similar systems in another country. The reasons for this vary, for example, due to differences in legislation and technical systems, and different working hours in various countries. The development of central bank digital currencies, CBDCs, and the underlying technologies that can be used could offer a solution. CBDCs used between consumers and merchants are known as retail CBDCs. Retail CBDCs could offer advantages such as faster transactions, more competition in payments, lower risks, and safety in the form of central bank money. Countries around the world are researching and experimenting with retail CBDCs, with many pilots underway. The central banks of Israel, Norway, and Sweden have joined forces with the BIS Innovation Hub Nordic Centre in Project Icebreaker, which aims to explore how retail CBDC systems can be linked together to enable efficient international payments. Project Icebreaker is exploring a specific model linking national retail CBDC systems together. The Icebreaker Hub routes payments and allows national CBDC systems to talk to each other, despite being based on different technologies. In this project, different distributed ledger technologies used by each country for their proof-of-concept CBDC systems were connected to the Icebreaker Hub. Let's see how this works. Say Alice in Stockholm wants to send money to Noah in Tel Aviv to pay for a camera she bought online. When she enters Noah's payment address and the amount into her mobile app, the Icebreaker Hub helps her find the best available exchange rate. This is calculated from the rates foreign exchange providers submit to the Icebreaker Hub. Alice's payment is then broken down into two payments, one in Swedish e-krona to a foreign exchange provider in Sweden, and another in Israeli digital shekels from the foreign exchange provider in Israel to Noah. These two payments are coordinated using a form of digital escrow known as a hash time-locked contract, HTLC. The payment from Alice to the foreign exchange provider will only be released if the foreign exchange provider has paid Noah. If no foreign exchange provider can exchange Swedish e-krona for Israeli digital shekels, the Icebreaker Hub will find a bridge currency, for example, Norwegian krona, that can be exchanged for both Swedish e-krona and Israeli digital shekels, and will use that to bridge the gap. Swedish e-krona are exchanged for Norwegian krona, which is in turn exchanged for Israeli digital shekels. The hub will always choose the payment path that is cheapest for the payer. The benefits of the model demonstrated in the project are: it enables cross-border interoperability, allowing systems with different technologies to talk to each other in a standardized way. It reduces settlement and counterparty risk by the use of coordinated payments in central bank money. It allows increased competition and choice for consumers, by decoupling payers from specific foreign exchange providers, as well as through the use of bridge currencies. It helps reduce costs. It helps achieve increased cross-border reach. It is scalable, easily connecting the systems of many countries. It is fast. Transactions take just seconds to complete. And CBDC does not need to leave a national CBDC system. Project Icebreaker has demonstrated that central banks can implement different technologies for their national CBDC systems that meet their needs and enable cross-border payments with minimal requirements. Further areas of work are still necessary, but the lessons so far can guide central banks when designing their national retail CBDC systems. Project Icebreaker, breaking new paths for cross-border payments.
Thank you for that. So before we go into the hub, which I think is a very exciting model, can you just expand a bit more on how, the Israel central bank with two central banks of the Nordics even got together, and what were the motivations from your context?
I'll start with the motivation from a personal basis. My son was doing a doctorate in New York, and the personal experience of trying to transfer him money to New York brought home to me the problems of the cross-border payment system. But we've been talking a lot over the last this morning and yesterday evening. Central banks, quite a few of them think that it's important that there is a central bank money out there. And as cash use declines, not necessarily the supply of cash, some central banks are beginning to get worried about a world in which there's no central bank money out there. And I know that sort of poll that we saw before sort of has some doubt about that. But if you ask, again, I'll use the example of my children. They don't have any cash in their pockets. They don't have any cash in their wallets. They think I'm an idiot for having a wallet, and I still do it there, even though I may use cash once a week only. That's about the only time I use probably one transaction a week. So we are already entering a world in which cash use, or legal cash use, is disappearing, at least in Israel. For example, you can't, if you want to go on public transport in Israel, you can't use cash. You have to use digital money. So we have to provide some form of solution for that sort of world. Now, it may be that central banks think that public central bank money is important. But if you ask the everyday person on the street, he doesn't know what you're talking about. He's quite happy with that digital currency that he's using today. So even if the central bank wants a digital public money, he has to persuade the public to use it. And so therefore, we've started thinking about what would be the uses that would bring people into using that digital central bank digital money. And there are a number of areas where there is possibilities about that. And there are groups that are, say, dissatisfied with the present system. And one of those groups, like, for example, would be small businesses, which pay actually fairly high fees under the existing system. But the consumer doesn't see that. He doesn't see that the price is already being put up. It's invisible for him. One of the areas where you could think about it as a sort of segue to get people to use a central bank digital currency is cross-border. Because when we ask people whether they're happy about the payment system, the one thing that comes up again and again where they're unhappy is cross-border payments and how much it's costing them. Even if they're doing a transaction on the internet to buy a product from Amazon or eBay or whatever, or Alipay, that's the sort of thing. So it could possibly be sort of a segue into persuading people to use a CBDC. I have to say that I'm not worried, as central banks talk about it, about a CBDC being too successful and leading to disintermediation from the banking system. I'm worried that if we do go ahead and actually put a lot of money into it and set up the infrastructure on a CBDC, no one's going to use it. And then I'm going to look pretty stupid. Now, the advantage of it is that I'm pretty close to the end of my career. So there's going to be someone else's problem. But I think that's something we have to think about. We have to think about how do we sort of make a product that people will pick up. And central banks aren't very good at this normally because we're not business people. If we were good at it, we wouldn't be working at a central bank. You know, I'd have gone out there and worked for a commercial bank. But we have to sort of engage people to try and do it. So that was a sort of motivation why we started doing a project on a CBDC with our colleagues at the Swedish and Norwegian central bank and using the BIS to sort of coordinate things between us.
Thank you, and I think that's a really interesting motivation. It's a segue for people to use retail is this cross-border, well, reducing costs in retail cross-border. So to be quite blunt then, would you say you are shaking up the banks, commercial banks?
It very much differs from country to country. So for Israel's case, one of the main sort of reasons we're thinking about a retail CBDC is precisely to increase more competition into a very concentrated financial system. So we actually think of the CBDC as a way of creating a level playing field. And the interesting thing is, when you ask when will there be a CBDC, it might actually in Israel be imposed on the central bank by the parliament, who is fed up with the 2 or 3 very large banks dominating the system. And I'll give you an example of that. In the P2P world, one commercial bank now has 80% of the market. And it offered it free at the beginning. Well, funnily enough, it's not offering it free now. So that's the background for it. So if we can think of a CBDC and if it could be successful, it could be encourage competition within the banking system. And I'll give another example of that. I was dragged in front of one of the parliamentary committees, and the issue is why commercial banks aren't paying interest on their checking accounts. Well, we know why they're not, because people are still prepared to give them money without them paying a thing. But in a very concentrated system, there's a lot of demand, there's a lot of criticism of that. And one of the issues now being talked about is, would you pay interest on a CBDC? If you think about it, which most sort of central banks automatically, and we did also, when we put out our initial paper, we automatically said, no, of course we wouldn't pay interest on CBDC. I'm not so sure anymore. There could be a justification to pay interest on a CBDC for 2 reasons. One, for that competition issue, and secondly, for making it attractive at an initial stage for people to use it.
That's very enlightening to hear, and it does mark a shift from ECB and others. So why not the wholesale side, just quickly? Are you seeing good competition in the wholesale side?
I think there's more competition in the wholesale side. I think the area which is politically and socially problematic is the retail side. So it's small businesses, it's individual citizens paying quite a lot of money. It's the small person in the street feeling that he's being done into by the large commercial banks. That's a political issue. Yeah. And again, we're not necessarily providing something that will substitute from the commercial banks, but we do want something that will provide competition and allow small fintech companies to give services and to sort of, let's say, unbundle financial services. And one of those areas is clearly in cross-border. And one of the things behind the hub that we were doing there is to actually make sure that there's no credit risk there. So a fintech company could be involved, and it doesn't need tremendous regulation because it's the credit risk is essentially taken out of the process.
So could you just expand a bit more on the hub and how it works?
Well, I might not be the best person to explain about the technology behind the hub, and that's why I asked you to put the film up there. Because when you're talking about sort of, hash security mechanisms to do it, that's not my area of competence. However, the hub is fairly straightforward to understand. If you try to link up 15 individual countries, CBDCs, or even faster payment systems, because it's the same issue whether it's a CBDC or it's a faster payment system. And it's not necessarily that the solution will be CBDC. It could very well be linking up faster payment systems. So if you're looking at 15 countries, you're going to need 105 connections. If you use a hub, you only need 15. The other thing that the hub does, and it's something that, again, for the regular citizen, when he does a foreign exchange transaction, he basically only asks his bank. The hub will automatically create competition because you will be provided with prices from a number of foreign providers. The only sort of condition they need to have is that they need to be working in more than one country. They need to have an account in more than one country. Now, probably means that we're talking about, at the initial stage, the global banks, but not necessarily. There are plenty of other institutions out there who actually have accounts in more than one country. If you think about it, it could even be exporters or importers or hotels chains that have multiple bank accounts. They, in theory, could easily connect up to this and provide a certain service. But my guess is at the beginning it would be the main financial institutions, but hopefully it would spread out. But the real reason for the hub is to increase competition.
So you've basically got this hub that provides the best exchange rate to customers.
Yeah. So you don't have to rely when you normally do a transaction the price that your bank gives you. You're going to get a price from anyone out there who's willing to provide settlement in more than one currency.
So what about the actual user experience? And how will it differ from MasterCard, Visa? What's the difference?
Well, MasterCard and Visa give a tremendous service. I mean, most people who use Master and Visa card are happy with that service. This is not a criticism of them. In fact, if anything, it's because they've been too successful. But they don't give you a service at the moment, for the most part, into P2P. They are, how can I put this politely, perhaps not the most competitive when giving prices in the cross-border world. I'm sure the beer I had last night is going to cost me more than the exchange rate that I thought it was going to cost me. And I was also a bit shocked how much beer costs in the UK now.
Yes.
It's gone up. So that would be another part of it. But we're not going to solve the problem of pricing of beer. But we do think about the pricing of foreign exchange.
Yeah. That's very, very useful, I think. And people, if they know that they're getting a better deal, will use it. What about privacy? If you're connecting, the domestic CBDC doesn't leave the country, but will the end users, will the recipient country know the details of the Israeli sending it to Sweden? How do you solve for that?
Well, we didn't in this sort of POC look at the privacy issue. I think this is something that needs to be looked at a bit further. Privacy is an interesting topic, and the foreign exchange thing is probably less sensitive to the privacy issue, because certainly in the hub, the person at the other side doesn't know what the transaction was for from the Israeli citizen. And just to the film showed that Noah was doing a payment to Noah in Israel. The reason we used Noah, it was my wife who's had an interest in getting this thing done, because she's making a lot of payments abroad to buy things. But the privacy issue is a difficult issue for CBDC, because, let's put it this way. The gentleman who talked about, maybe the central banks will try and get over, all payments and stop it when inflation's going up. We're never going to persuade him that we're safeguarding his privacy. He's already outside the scope of the privacy thing. So there's a small group of people who, even if we say that we're not going to look at the data behind it and we have the technology to look behind it, we're not going to satisfy those people. But privacy is, to an extent, a cultural issue, and it differs from place to place, and it differs from within the country. So, for example, within Israel, I think privacy is more an issue for minorities. And we'd have to get over the lack of confidence of minorities about a central bank having data, even if we don't see the data. So the model we're thinking about is we wouldn't actually see the name of the person on a ledger. It would be some form of code that only the PSP, the payment service provider, he would then be able to untangle that code, and that would give him the balance for his client. But we are going to have to convince people that it's certain groups of people that we're not going to impinge on their privacy things. But it's not going to replace cash. The people who are using cash today because they want to hide their transaction, they're not going to come to a CBDC. Yeah. That's clear.
Yeah, and we willingly give our information to thousands of private companies. It's the public sector having it, which I think is a challenge. Anyone have any questions from the audience before? I have plenty more, but happy to come to some. Two here. Please state your name and what company you're from as well, please. Thanks.
Thank you very much. My name is Michael Patrick Joyce. I'm a barrister lawyer with the 36 Group. I was very interested in what you were saying about the possibility of interest-bearing CBDCs. But does the fact that a CBDC bearing interest changes the type of the core essence of the central bank digital currency? Does it therefore involve a greater regulatory overlay? And if so, and without international cooperation on regulation, does interest-bearing CBDCs then have an adverse impact on international interoperability?
I'm not sure about the last part of it, but it's not a simple issue. So I've thrown it out as a sort of a thought-provoking idea. Let me give you a couple of examples. When we think of a CBDC, we think of it mostly as a payment instrument. When you start adding interest to it, you're thinking about it as a store of wealth instrument. And that's probably not a road that we want to go down, because then you will lead into a large disintermediation from the banking system and certain sort of implications about that in terms of credit. But you could think about it as small amounts of money. So let's say, just throw out an example. You could hold, not necessarily be restricted on the amount you could hold, but only up to, let's say, 5,000 shekels would you have interest paid on it. So it wouldn't be the idea being that it would become a store of wealth or replace other financial savings instruments, but just sort of similar to your checking account, that you'd get some form of interest on that. And again, for us, maybe the incentive is just to push the banks a little bit to reduce their bid-offer spread on between deposits and credit.
Excellent answer. And the gentleman here?
Thank you. My name is Ricardo. I'm a software engineer from GFT. My question would be more about the hub. So how would it basically, would this be for individual people to make transactions? And how would it stop software and companies from making money just by making a lot of transactions between the different currencies? Would this be just for the individual that wants to send money, transfer money from one currency to another, or it could be exploited by other use cases? Yeah.
I think when we're thinking about the retail world, we're thinking about private individuals, we're thinking about small companies. We're not thinking about large companies, because there's already a highly competitive market that serves the large companies and the bid-offer spreads there are pretty competitive. So we're really thinking about, when we say retail, we really mean retail. It will be small amounts of it. But we do see, I think we do see that it could possibly encourage new players to come into that sort of world and offer prices. Because part of that mechanism that we talked about, and that the film talked about, was the fact that the monies, it really is a DVP-based system. That monies are only released when the other side knows it's paying out. And therefore, a fintech company would provide that pricing. Its risk is only it's foreign exchange hedging. It's not a risk about credit settlement. And that would, I think, allow new players to come into that sort of market.
Over here. Thanks.
Elliot Hento from Macro Policy Research at State Street. You're in front of parliamentary committees a lot. How would you quantify the exposure, the loss, or the ceding of sovereignty by committing to kind of a supranational project? I'm extrapolating extreme circumstances, but let's say it's 2022, we've seen how certain economic blocks can sanction or exclude other participants from payment networks, from access to capital markets. To what degree is the argument for this stronger here to say, well, you know, let's say overnight one country is excluded. To what degree is there a loss of accessibility that once it's up and running is, you know, the country and retail participants become very comfortable with? How would you explain that to some of your parliamentarians?
Maybe answer the question in a slightly different way. In order for the hub to work and different countries to connect up to it, the countries that are members of it, my guess is they would choose which other countries transactions can be made to. So they'd have to be comfortable with the KYC practices on the other side of it. So my guess is that, you know, just like today, when you have correspondent banks working, one correspondent bank from Israel is comfortable with the correspondent bank in, let's say, the US and Europe, and with the regulators there, and therefore he will make his transactions through it. That same form of level of comfortableness would have to be between the different players within the hub. And that's still a problem behind cross-border payments. So not every country will necessarily want to have transactions with other countries if he's not comfortable with the money laundering and KYC regulations and governance in the other country. You're not going to get over that. It's not really an issue about the individual parliament, that parliamentary committee. That's not where I don't think there's going to be a problem. There is going to be a problem in terms of the KYC.
Do you think we'll ever get over that?
I think what you'd have is, and I'm not sure what's going to be the winning, there are lots of projects going on about the cross-border things, and I have no idea which one's going to be successful. It's certainly not going to be the product that we built. Something else will have to be. This is a very basic product that was done, and it was done very quickly by the three central banks involved in it and the BIS. But it was more for us to understand some of the risks out there. So I have no idea which sort of solution is going to be the winning solution. One thing was interesting that we began to realize is when you connect up a CBDC or you connect up a faster payment system, it has liquidity implications for the players in that system. When you normally do a foreign exchange transaction from one country to another, it may take a couple of days for the monies to flow. My first career in central bank was as a foreign exchange trader, and trades are still done spot. So you had 2 days to find your foreign exchange. But if you do it on a faster payment system, or you do it on a CBDC, you could have liquidity instantaneously, and that has a price. And that's something that the market is going to have to think about, because we may think it'll be cheaper, but then you're going to have to price in liquidity. and what would be the final pricing from that sort of model. And this again refers to, and the people are trying to connect up faster payment systems, and you're trying to connect up different things, but the speed has a cost. And the question is how much you want to pay for that speed.
So you can imagine lots of new business models after this. Different trade-offs between cost and speed.
Again, if it's successful, I've no idea whether this move to link up faster payment systems or CBD systems will be successful. I think there's still, there's a lot to be sorted out before we get to that sort of world.
I think that's a great way to end it. I just want to quickly have a look at the poll results, if we can. Oh, can't quite see. Oh, I think you've quite strongly in favour of your hub and spoke solution, Andrew. So the audience approves. But thank you so much for your candid and open discussion. It was an absolute pleasure to have you. And please do come to Andrew with any remaining questions. And do join us for lunch. Thank you so much.